Hello and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased you've joined us for our Metals and Mining Conference. Our next live presentation is from Luca Mining. Luca Mining is a Canadian-based mining company with 200% owned Mexican gold, silver, and base metal mining projects. Please note, you may submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking the book meeting in the top toolbar. At this point, I'm very pleased to welcome Dan Barnholden, Chief Executive Officer of Luca Mining, which trades on the OTCQX Best Market under the symbol LUCMF and on the TSXV under the symbol LUCA. Welcome back, Dan.
Thanks for having me. Very much appreciate the opportunity to present to your audience, and also while I'm here, and kudos to the OTC. We've been thrilled with our trading volumes on the OTC, and we're appreciative of the honor that the OTC presented us with last month as one of the top 50 on the OTC. So thrilled to be involved with the OTC. It's been a great market for us. Luca Mining, I'm the CEO, Dan Barnholden. Happy to be here presenting. On the front page of this presentation, you will see three key words that are really the pillars of value for this company. We have two operating mines in Mexico, and we are in the process of applying this strategy to these mines. And those strategies are optimization, exploration, and expansion. We are in the process of optimizing operations at our two mines, the Campo Morado mine in Guerrero State and the Tahuehueto mine in Durango State. Neither one of these projects has had any substantial exploration in well over a decade. So over the course of the last 2 months, we've announced very meaningful and additive exploration efforts at both mines. And assuming that those exploration efforts bear fruit, we see a path to doubling our production organically from these two mines over the course of the next 3 years, going from 60,000 ounces that we did in 2024 to 120,000 ounces from these assets by 2027. Moving into the presentation here now, obviously some cautionary statements. Would advise people to be aware that we are making forward-looking statements. Moving in then to the main body of the presentation. We view ourselves as Mexican mining experts. We have an incredible corporate infrastructure. We've got a head office in Mexico City, 18 people there, and we've got two operating mines in Mexico. Campo Morado is our largest mine, accounts for about 75–80% of our production and value. That's in Guerrero State. Guerrero is a very active mining jurisdiction. Our neighbors include Torex Gold, Equinox Gold, and Peñoles. Up at our secondary mine, which is in northwest Durango State, one of our nearest neighbors that people would be familiar with is San Dimas, which is an asset that is, it's a mine, in fact, that is operated by First Majestic. Closer to us is Fresnillo's La Ciénega mine. We are a company that produces almost an equal amount of precious metals and base metals. That's helpful for us because on any given day, one of our metals is bound to be rallying. Most recently, we have been participating and enjoying very much the move in the gold price. Over the course of the last 5 months, the gold price has moved from about $2,500 to in excess of $2,900. That's been an opportunity for us to almost double our margins. If you think about 5 months ago, the gold price was under $2,500. For round numbers, let's say that our AISC, all-in sustaining costs, are, call it $2,000 just for round numbers. Our margins have almost doubled. Our share price has almost doubled, but I feel like that doesn't give us very much credit at all for the operational improvements that we have made. Here's a snapshot of where we will finish 2024. We will do almost 60,000 ounces gold equivalent production. AISC for the first 9 months of 1,842. That's an actual number. Don't expect a major move off of that for the last quarter of 2024. We have de-risked operations, and what I mean by that is we have every permit that we require. All the capital that needs to be spent on these operations has been spent. So with junior mining companies, often you run into issues of permitting or of CapEx blowouts. Neither of those two risks are applicable to us. We've got $500 million worth of replacement cost infrastructure, including grid power to site at Campo Morado, roads, mills at both Tahuehueto and Campo Morado, and hundreds of thousands of meters of underground development. We've got 2.5 million ounces gold equivalent resource between the two mines, and that resource and our throughput have very meaningful upside that I will describe in the upcoming slides. We've also got a very substantial and growing cash balance. In the early part of January, we announced a debt reduction transaction. Post that, we had $6.75 million. Subsequent to that transaction, we have been seeing very active warrant exercise, and we're also adding cash to our balance sheet from cash flow from our mining operations. So very comfortable cash position, growing cash balance, and I'll describe our plans for using that cash in an accretive way as we move through the presentation here. On the first day of Q4 2024, this company put out an announcement that talks about the 6 major catalysts that we have to create value for shareholders through Q4, of course, which is now over, and into Q1 of 2025 and beyond. The 6 major efforts that we have are primarily technical, and then, of course, the balance sheet optimization and the capital structure of the company that we are actively working on. So number one, in August of last year, we hired a mining contractor. That mining contractor is called Cominvi. We believe that they are one of the top mining contractors in Latin America. Cominvi came in August. They were set a goal of getting to 2,000 tons per day throughput delivered to the mill on a daily basis. When they came in, this company was struggling to do 1,500 to 1,600 tons per day consistently. On January 31st, or through January, we were able to process 62,850 tons, so in excess of 2,000 tons per day. So we successfully knocked off that goal. The mill is actually built for 2,400 tons per day at Campo Morado. So we believe that through the first half of 2025, we should be able to further increase our throughput by 20% and get to that 2,400 tons per day consistently. Next, we've got an optimization program going on at the mill at Campo Morado. That's a project that we're working on with Ausenco. And people that are really interested in diving into the nuts and bolts of what we're up to at the mill can easily find online technical presentations being done by Ausenco that talk about the metallurgical improvement opportunity at Campo Morado. Largely what we're doing is we are improving our metallurgical recoveries, which in turn improves our payabilities from Trafigura. So I believe that across the board, we should be able to improve our recoveries in all of our metals by in excess of 10%. Next, we have exploration efforts at Campo Morado. We announced in January that we intended to, or in fact, we are pursuing underground exploration. We have announced that those drills are turning underground at Campo Morado. I believe in March of this year, we should be in a position to announce drill results towards the end of March from our inaugural drill campaign since 2011 at Campo Morado. Over at Tahuehueto, again, our secondary mine in northwest Durango, we expect commissioning. We put out a press release, the same press release that we put out last week. We announced that we had done 24,700 tons to the mill there. When we are able to consistently do 1,000 tons per day, and we're pretty darn close at this moment, we will declare commercial production. We also have some some maintenance work that needs to be completed, but we're very, very close to getting that commissioning done and declaring commercial production at Tawa Weto. At the full commercial production, I would expect that asset to do 25 to 30,000 ounces gold equivalent production. Next, we have exploration at Tawa Weto. So we announced in mid-December of 2024 that we had kicked off exploration efforts. We've completed 10 holes now at Tawa Weto, 5 of which are at the lab. We are in the process of getting the information back from the lab, and I do expect to have an announcement on exploration from Tawa Weto in the upcoming weeks, hopefully before the beginning of March. So that's a February goal for exploration results at Tawa Weto. Lastly, it's this repayment of debt. One of my major goals as CEO of this company is to get our debt repaid as quickly as possible. According to our debt repayment schedule that we have with Trafigura, we would be fully debt-free and having repaid all of our debt by mid-2026. However, we are making extraordinary efforts to get that debt paid down faster. Again, we're adding cash to our balance sheet through warrant exercise and through cash flow from our mines. My goal is to be debt-free by the summer of 2025, so accelerate that freedom from debt by 12 months. I think demonstrating the possibility of doing that is 4 months ago, we had $18.2 million in debt. Today, we sit with $10.5 million in debt, so we've paid that down by about 40%. Again, the goal is to be debt-free by July of 2025. So where does that get us? If we're able to execute on those 6 core catalytic items, where do we end up as a company? We will have 2 fully permitted producing cash flow generating mines. Those mines will have very substantial development and resource growth upside. We will have a clean balance sheet. Again, the goal is to be debt-free by mid-2025. And we will have 2 very aggressive exploration campaigns going, 1 at each site. I believe that company that I've described there should have a market cap substantially above where we trade today. Dig in a little bit to our assets here, moving first to Campo Morado. Campo Morado is a 100% owned underground mine. It's a VMS-style deposit, which means that it has zinc, copper, gold, silver, and a little bit of lead. The resource is about 15 million tons of M&I, and that grades about 4% zinc, 0.8% copper, 0.93% lead, 123 grams per ton silver, and 1.7 grams per ton gold. As we think about our exploration efforts, we are targeting more resource at approximately that grade. We think about 4% zinc, 1% copper, 1% lead, 100 grams per ton silver, and 1.5 to 2 grams per ton gold as very, very profitable ore grade material. And we believe that we can find substantially more of that at site. And that's been one of the mandates of the exploration team that we hired in June, is to go out and grow that mine life. I believe that the mine life can double from here. On the processing side, as I mentioned, we've got a 2,400 ton per day mill. That mill, the goal for the mining contractor that we hired is to consistently fill that mill at a rate of 2,400 tons per day. For 2024, we will have done 39 to 46,000 ounces gold equivalent gold equivalent production. We generate at this moment a zinc and a copper concentrate. Moving to the next slide here, one of the things that we are working hard on is improvements at the mill. One of the big pieces that we have underway presently is working towards generating 3 discrete concentrates, one zinc concentrate, a bulk concentrate, and then a pure copper concentrate. What that will do is it will mean more metal recovered from the mineralized material or the ore that we are processing, and more payability, meaning we get paid more. And the big piece in the copper concentrate is that there's no lead contained in the copper. So rather than lead being a penalty, as we move to 3 discrete concentrates, we actually get paid for the lead. Moving to exploration, you can see here on this slide, these are the 5 original ore bodies in red that were discovered in the late 90s by a group called Farallon. Farallon developed these. This asset was sold in 2011 for $410 million. It was under-maintained, wasn't widely explored. So there's an opportunity for us to go back and take all of the data that was generated by the prior owners. There's structural mapping, surface mapping, almost 30,000 soil samples, almost 600,000 meters of drilling that's been done. There's been geochem work, gravity surveys, aeroborne magnetics, et cetera, et cetera. And so what we've done with that work is we've revisited it, and we have generated 38 high-quality exploration targets. Those targets are in the bottom left picture there. We've distilled that to a top 10. And of that top 10, 4 we consider to be drill ready. Why they're drill ready is they are on our mining concessions. That means that we only have a duty to inform the Mexican government. We don't need to apply. So it's a 15-day process. That will allow us at Campo Morado to be exploring at least 4 surface drill opportunities there. So that's something that we're very excited about, obviously, is the exploration potential at Campo Morado. Moving to Tawa Hueto. Again, Tawa Hueto, smaller mine in northwest Durango state. Again, we own it 100%. It's an underground mine. This is more of an epithermal gold silver, very typical of what you would see in the Mexican context. It's a smaller resource base. It grades about 2.5 grams per ton gold, about 50 grams per ton silver, 1% lead, almost 2% zinc. We do have some copper in there, but it's not payable. It's got a mine life of 10 years, replacement value about $100 million. It is built for 1,000 tons per day. Again, we are bumping up against that fully filling our mill. And again, that's the moment at which we would declare commercial production. For 2024, it will have done 16 to 19,000 ounces gold equivalent. Again, the goal, 25 to 30,000 ounces gold equivalent for 2025. Very standard infrastructure, portal, decline, vent raises, and so forth. Here we do 2 discrete concentrates. Again, all of our concentrates at both mines sold to Trafigura. Trafigura is also our lender and our off-taker. So we've got a very good, strong relationship with Trafigura and obviously Trafigura was our counterpart in the transaction when we bought back the convertible debenture. Here's a picture of the mine. Obviously, it's into the side of a mountain. I always find it incredible that that somebody found their way up to this part of the world to actually do this exploration work. Again, it is into the side of a mountain. Why I like to show this picture is that we can demonstrate that we are mining into the side of a mountain, but when the ore comes out, gravity actually really works in our favor as we see ore going down the hill to the crushing circuit, processing plant, and then further down into the valley for the tails. Again, why I like to show that picture is because it sets up this exploration potential slide very well. We are mining here in the middle of the top picture where it says Creston. Creston vein is the primary mining vein that we are working right now. That is the vein that contains the resources at that 2.5 grams per ton gold and those other metals, sums to about 3.5 to 4 grams per ton. We believe that we should be in a position to find more of that material, particularly as we drill what we call the highly prospective gap. You can see the veins are known to us on both sides of the mountain. It has every appearance that the vein is consistent on one side of the mountain to the other. And so we believe that there is exploration potential to potentially connect that veining, and that would be a major increase to the resource potential at Tawa Hueto. So what else are we doing? We're stepping out along strike north and south there. At this moment, we are drilling from underground, so we're sort of pushing in advance of where we're mining. Then we're going to drill at depth to determine the vertical extent of the mineralization. And then in the bottom picture there, you can see, it's not a great picture, but you can see 14 known veins that are outlined with the yellow squiggly lines. The veins that form our resource are the red lines. And so the resource is actually only declared on 5 of 14 known veins at Tawaweto. So massive exploration potential. And again, we're investing heavily, $2.5 million to be invested in exploration here. Drilling results should be forthcoming within the next 2 to 3 weeks. So here's that's really the overview of the assets. Here are our corporate statistics. 228 million shares outstanding. That is growing fairly quickly as these warrants are exercised. You can see on the bottom left-hand side, we've got about 25 million warrants at 50 cents. In reality, it's substantially less than that. Those are coming in with our share price performing particularly well since we did the debt repayment. Share price is obviously up substantially since that time. So we got a lot of these warrants coming in. We had $6.75 million as at early January, $10.5 million in debt as at the 1st of February. So that debt is falling, cash balance going up, both from warrant exercise and from cash flow from operations. We have 2 research analysts that cover us, Ventum with a $1.50 target price, Maxim out of the US with a $1 target price. We think that given the momentum that we have, and the momentum really comes from 3 areas. Price of gold, obviously, the sentiment around mining in Mexico has improved dramatically. One of our peers, Alamos, received a permit 3 weeks ago. I think that set people's minds at ease around being able to operate successfully in Mexico. And then the last catalyst, of course, is our operational and capital management work that we've been doing. And really, it's about doing what we said as a company. We've managed to hit a lot of the targets that we set for ourselves when we were coming in as a new management team. I see that there's a big opportunity for us to address the institutional market. Only 6% of our shareholders are institutional. I feel like that's growing, particularly on the back of some of the volume that we've been able to demonstrate. Moving here now to the team, a couple of individuals that I like to highlight on this slide that I'm very proud to be working with. Dr. Neil O'Brien was the VP of Exploration for Lundin Mining, really Lucas Lundin's right-hand man as they built Lundin Mining into a multi-billion-dollar company. So Neil sits on our board, very helpful. Phil Brummett, also an ex-Lundin mining guy. He was the mine GM at Candelaria, which is a massive underground and open pit copper mine in Chile. Ruben Ortega, he is the brother of the CEO of Fresnillo, so allows us to be very plugged into the mining community in Mexico. And then David and Peter, both mining financiers based in London, and Rory is a securities lawyer here in Vancouver. Management team, myself, former investment banker, real capital markets practitioner. I've been marketing this story, financing this story, and recruiting people to execute on this vision. Ramon, based in Miami, but he grew up in Mexico. He's our president, spends a lot of time on site. Paul is one of the new hires. Paul joins us as the former VP of exploration for Victoria Gold, where he was able to delineate an extraordinary mineral resource, millions of ounces of gold found to his credit. Armando, born and raised on the mines in Mexico, so an encyclopedic knowledge. Ramon Mendoza joined us after a 10-year stint at First Majestic. Ramon was really responsible for incorporating Santa Elena into the First Majestic portfolio, and then Lisa and Israel rounding out our finance team. So where is this company going? So we have, again, 2 mines that are increasing in production, increasing revenues, and ultimately increasing cash flow. We have production growth potential at both mines. We are targeting to double our production over the course of the next 3 years to 100 to 120,000 ounces gold equivalent production from our existing mining portfolio. Obviously, those exploration programs that we have at both sites, I expect those to be highly productive. And then, of course, in the longer term, I will have no problem executing on M&A. I think that we have proven an aptitude with that optimize, explore, and expand philosophy. I think there are lots of potential opportunities for us in Mexico. Ultimately, we would like to be a 200,000-ounce gold producer with a $1 billion market cap. So we've got a lot of room to run here from there. I also won't hesitate to return capital to shareholders. I think that I've demonstrated that we're fully financed. So I tell every investment banker that ever calls me, no capital to be raised. Nobody on this call will wake up to a financing announcement. We are fully financed, fully capitalized, to the point where we may have potential in the upcoming months and years to actually return capital through normal course issuer bid, through dividends, etc. I'm going to move now to questions. We've got about 5 minutes left for questions. Just seeing through here, some very good questions. I see a question here on acquisitions. If you were to acquire other assets, would you aim more for precious metal assets, base metal assets, or do you have no preference? We like to think of ourselves as profitable miners. If we are presented with an extraordinary base metals opportunity where we can apply that philosophy of optimize, explore, expand, we would do that. Obviously, this market is particularly conducive to precious metals. So I think we will have a slight bias in this market to precious metals. But really what we think that we have a particular expertise in is the Mexican mining context, taking operating assets that are underperforming and bringing frankly, for a company with a market cap below $200 million US, the team that we've assembled here is really quite extraordinary. So I think awesome opportunities in Mexico for us to look to acquire, and we're open-minded, but probably a slight bias to precious metals. Here's a question of where do you expect to get the money to double production, and how much will you need? This is really the beauty of this company, is that because we are generating very material cash flow from these assets, and the ramp up isn't expensive, we think that we're actually fully financed to double that production profile. We expect significant growth in 2025 over 2024 as a consequence of the work that we did in 2024 to set the table for that production growth. A big part of that is the mining contractor that we brought in. Another piece is that work that we're doing on the recoveries with Ausenco at our mill. Another piece is the work that we're doing at Tahuehueto. So part of this is just a natural ramp up, and then part of it is optimization. It really is truly capital light. The capital that has been invested by the prior owners of Campo Morado, it's extraordinary. I mean, you go to Campo Morado, and it's as well built as any mine you will see anywhere on the planet. They spared no expense, and we're obviously the beneficiaries of that. I see a question here from a dear friend. Can you elaborate on your board skills and how they add value? I think that I've talked a little bit about that, but happy to expand a little bit. Neil O'Brien, as I mentioned, he spent 20 years as Lucas Lundin's right-hand man. Something in particular about Lundin Mining, people that are very sophisticated in the mining space will recall that one of the core assets for Lundin Mining at the time that they were really in their big growth phase in the early 2000s was an asset called Neves Corvo, which is a Portuguese VMS-style deposit. and we have a VMS style deposit. So the insights that Neil brings, the relationships that Ruben has with his brother being the CEO of Fresnillo, it's an excellent board, multidisciplinary, and really adds a lot of value to the company. I see that we're coming up to 30 minutes here on the presentation, so I will say thank you and goodbye, and please do not hesitate to reach out and contact us either via email, phone, on our website, www.lucamining.com. Happy to hear from investors, and always happy to hear from investors that have done well on their investment in the company. So thank you very much. Appreciate you tuning in.